Well, I started obviously in 2018, and then from there it was kind of just a slow grind. It was getting COVID.
What led you to develop the business side of things rather than doing it yourself personally?
A lot of people were asking me questions like, "Oh, what does this mean? Like, what is it?" This is like basic trading questions. So, and I kind of enjoyed just helping out people. If you can understand what the fundamentals are going to do in the future based on what we know, you can, to a certain degree, predict what price is going to do. In trading, it's very personal.
Here at Quant Tekel today, we have the founder of Beau Monde Outlooks. Did I pronounce that correctly?
Yeah, you did.
Perfect. Mark Fraser. He's been providing fundamental analysis from launching his own trading journey in 2018. And we're here to discover more about him, what makes a successful trader, his outlooks, and his strategies that have brought him his own success. So Mark, pleasure talking to you before we started and getting a bit of an insight into what you've done in the past and what's got you here today. But tell me about your own trading experience prior to setting up your firm.
Well, I started obviously in 2018.
Yeah.
I find it kind of like how everyone else does it really, where you see it online. Saw like a flashy lifestyle, and I was like, okay, that looks pretty interesting. And then I was at uni at the time as well, so I kind of had a lot of free time to some degree. And then I was like, oh, this is quite interesting. Done it. It was obviously signals, and as everyone who's kind of semi-experienced in trading knows, that signals pretty much never works. And then from there, it was kind of just a slow grind. It was getting COVID, and then I started another firm, a more educational base. And then obviously I met Drew through a mutual friend. And then from there we started Beau Monde.
Beautiful. And did you spend a significant degree of time trading by yourself prior to setting up your educational process or achieve a level of success within that? And what led you to develop the business side of things rather than doing it yourself personally?
So I started on a demo account, as most people do. Luckily for me, I was working at the same time, so I had a decent amount of savings. So I had like a nice big buffer. And then every now and again, I'll just put like 250, 500, 1,000 in. And then I didn't make a lot. I kind of nearly blew the account. And then I just slowly kind of worked up because obviously I had a buffer still from working, from grants from uni as well, which I don't recommend anyone do, using their own or like the uni's grants to put into trading, but it's just what I was interested in. At the time when I first started, after like a few months of like learning, a lot of people were asking me questions like, "Oh, what does this mean? Like, what is it?" This is like basic trading questions, so I was happy to answer that. And then I kind of enjoyed just helping out people. And then obviously during COVID time, I was learning the fundamental stuff, which is obviously what I'm doing now.
Yeah.
And then Drew came along at the right time, and we both hit it off once we met each other. Is that actually kind of both really like fundamentals? Why don't we go out and teach people? And then that's pretty much it.
Beautiful stuff. And you touched on COVID times quite a few times there. And I can distinctly remember how illogically the market moved during that time. Yeah. Tell me a bit more about fundamentals and how the everyday trader or someone who's getting into trading can benefit from fundamentals during any time within the market.
There's one thing that I noticed when I was before I learned fundamentals, is that markets move on. I don't want to say news, because when people think like fundamentals, they think like looking at a red folder, coming out red, or like coming out really bad, and then they sell the pair. That's not fundamentals. Fundamentals, from what I know, is you look at all the events in the world, like COVID, like you said, was a pretty crazy event, like a massive risk-off event, and you buy gold, you buy like into the dollar, like safe havens basically. But obviously at the time I didn't know that, so it was like very erratic moves. But once you do eventually get into the fundamental space, you understand that fundamentals moves price. So if you can understand what the fundamentals are going to do in the future based on what we know, you can, to a certain degree, predict what price is going to do in the future.
That makes sense. And from your standpoint now, how do you see your company's experience help shaping the lives of newer traders or businesses using your data moving forward?
So obviously, 2018, nobody really spoke about fundamentals. During COVID, nobody pretty much spoke about fundamentals. Even today, like I don't know much people that would teach fundamentals, based purely because of how complicated it is. Like, there's a lot of stuff to learn. But how if you speak to multiple people, more people getting into fundamentals, and it's making more sense now. So what we're doing is we're trying to simplify fundamentals to a certain degree based on my knowledge, and Drew's of course, and trying to help people just simplify fundamentals basically.
You touched on something very interesting there, that there's a lack of desire to learn based on the expediency or easiness that it is to pick something up, i.e. if something's complicated, someone might veer away from it. How do you see, from looking at both successful traders, traders who haven't made it yet, and traders who have given up? What's been one core differentiator between the person who has tried to become profitable and failed, lost interest, the person still trying, and the person who's succeeded, in your own personal experience?
That's a good question. I would say the biggest difference between someone who's kind of quit, gone off and done their own thing, and still do trading but leave fundamentals away and just kind of go straight into technicals, to somebody who's very good or very competent at it, would be just their willingness to look for other information. Like when I was learning, don't get me wrong, I was not perfect. I was very lazy. But then one day I was just like, you know what, let me just at least put a little bit of time into researching outside of the basic stuff. So when I say the basic stuff, I'm talking about what is inflation, what is GDP, what are interest rates, but then looking a little bit higher than that, and then the other stuff seems easier. If that makes sense.
Totally.
So the difference between a person who left fundamentals to somebody who is pretty decent is that's just that willingness to just go the extra mile. Sounds cringe, but it's true.
Well, how can you... It's interesting that... I find that actually fascinating, because during my time of working within financial sales, I made a point of educating myself as much as possible onto everything that could be happening in the UK economy if I'm speaking to UK clients. So I'm an expert in that field. Whereas if you're choosing to, let's say, trade euro dollar, but you're not reading or learning anything that's occurring within euro news, that may drastically affect the trades that you're choosing to take, you can have the best support and resistance lines or whatever else in the world. If you haven't taken that into account,
that's true,
you'll come unstuck fairly quickly. And have you found that with those forms of traders, then by them taking those extra steps, learning more about the process behind money and how it flows, that's helped them to enable a degree of success?
Yeah, I would say that.
And then we were talking before about the mentality or the psychology behind money or earning money from trading. What's been your own personal experience within seeing degrees of success, and how have you managed that within your own life?
So yeah, like we was discussing before, like I'm not a good person at saving money. I used to be not that good. I'm still a little bit, not great. But what I've learned is just at some point you're just going to get bored of just buying loads of rubbish. And then from there on, I was like, actually, you know what else can I put the money into? So like property, for example, trying to learn a bit more on crypto, because I used to be big on crypto back in COVID times. Trying to learn, obviously, more businesses to open. So like what other avenues can I put this money into to try and like not feel restricted, if that makes sense? So that's what I would say for me is something that I have tried to do a bit more now. What's
your opinion on the leap from trading to entrepreneurship?
The leap is kind of similar in a sense that in trading, it's very like personal. So like you can have all of the information, but if you don't go out and do the work, you're not going to get there. In like the realm of owning a business, it's kind of similar where, for example, I don't know, if you want to open a business in trading, that's fine, you have the knowledge. But if you want to open something elsewhere, you're going to have to go out, like you said earlier, trying to find out as much knowledge as you can on that subject. It's like if you want to open, I don't know, a hairdresser's, go and try and learn as much as you can. It's the same thing, but just slightly different.
Okay, yeah. And explain to me some of the challenges that you had moving from trading, self-employed as a trader, reliance on self to earn money from the markets, to building your brand with your business partner and having a reliance on the marketplace, i.e. a demand for your product or services, comparative to extracting money from the markets for you personally. What was the biggest challenge for you?
The biggest challenge for me was, obviously in trading, you don't have to do any sort of marketing, in the sense that I'm not a marketer. I don't do too much content. For me, that was the trickiest thing, because it's similar to, in the sense that I was already teaching back before I had Beau Monde and stuff like that. So it's kind of transferable from that. Like it was pretty much the same. For me, it's just getting your face out there more, just being consistent with content. Like the same thing that you'll probably hear on multiple TikToks that say, how do I grow a business, or how do I put my brand out there? It's always going to be the same stuff of doing content, putting your face out there, doing more research. So that for me was the biggest change from being your own thing with trading to then trying and building your brand a bit.
And have you got a degree of comfort around that now, or feel a little bit more comfortable now, or is it still a mildly fish out of water type scenario?
For me, I think it depends on the content. So I'm happy to do content that revolves around teaching.
Yeah.
So I'm happy to do a video on what is inflation and do it from that. But if somebody tells me to do like a day in a life video, that's just not gonna.
That's not you.
That's not a bit of me.
And that's okay though, because it's important to be true to yourself. This is my first experience of doing any form of online marketing. For the first 6 months, I just didn't look at a camera and look like this sideways, and it took me a very long time to get used to it. It's very interesting seeing the way that over time, the way in which a business is marketed, the way in which services are provided has changed, and then moving with those changes. It's an interesting experience to watch.
That's true.
And be a part of. And what's next for your business in your opinion? What are you excited about?
I think the dream that myself and Drew have always, when we first met, that was like the first thing, like what do we want to do? And our dream, our thing is to open up our own fund, do our own sort of, like a hedge fund to a certain degree. That's still what we really want to do, especially for me anyway.
And would you actively trade, or would you look at?
I would like to say that I would,
Yeah.
But I suppose at some point there will be a certain level of, okay, you can't really do as much trading now because you need to do this meeting, or you need to go here, or you need to go there, or you need to manage them. But I would say, like, at the start, that would be something I'd be happy to do, yeah.
That makes sense. That makes sense. So, Mark, there's a huge amount of speculation online about how the markets actually work. Is it algorithmic? Are banks hunting your stop loss?
Yep.
What's your take on that?
So obviously, to a certain degree, it is algorithmic because a lot of banks have a lot of big algos. But obviously with algos, it's high frequency. That's why it's called high frequency trading. It's in and out, in and out, in and out, in like seconds, basically. And then you've got the other angle of, like you said, like people saying, oh, like this city, for example, are trying to hunt your stop and just liquidate you. I would understand why people would say that, because obviously people place their stops at the most obvious levels. Like they would sell at the supply zone, for example, and then put the stop just above the high. Obviously, that's very bait to the bank. Like people would know this is where liquidity is. However, what I would say to that, to some degree, it's correct, because you are going to get market makers who don't follow the book, because market making is heavily regulated. So they're not meant to do that. But you do have dodgy people. However, a lot of people are either trading like real accounts or like normal brokers, prop firms. I'd say those are the main two. With prop firms, a lot of people are B-booked.
Yes.
So obviously you're not technically real liquidity, if that makes sense. Like B-book is you're trading against the broker's liquidity.
Yes.
So your order's not hitting the actual market, if that makes sense.
That does make sense. However, if the feed of data provided by the prop or by the brokerage that is providing it to the prop is still driven by live market data, it's not demo conditioned, so it would work under the same environment as funds in a brokerage account. So for a prop client, what would be one piece of advice you could give that would provide a winning edge against those sorts of risks that you just mentioned?
So I can't remember who said it. I know there's some like really old trader who said, put your entries where people's stops are.
Okay.
So I've never tried that personally, because it just seems very like alien to me. Like I'm trying to sell at this supply zone, but they want me to put my entry there, but that doesn't make sense from a technical perspective. But what I would say is, for me, I traded a lot on the lower time frames when I started. However, now I'm trading higher time frame. And when you trade higher time frame, you have a wider stop. But you're still capturing a decent risk to reward. You're just obviously holding it for longer, but that suits my personality. I'm very, laid back, and I'm happy to wait. But just go on the high time frame. I always tell everybody this: go on the high time frame, put your stops at the higher time frame level, and watch how many times your stops get taken out. It's not that much at that point.
And how did your own personal trading evolve when you made that decision to move to
the higher
time frame? Because you mentioned there the result, but I'm interested in understanding the process for you personally and how it might be for other traders.
So how did I go from lower time frame to higher time frame? What pushed me to that? Number one, it's my personality. So I'm a lot more laid back. I know some people are very like they want to get into the market, so they're happy to go on the lower time frame. That's fine. Like that, you can do that. However, for me, what I found was I'm a little more laid back, so I'm happy to wait. Fundamentals are a bit more high time frame. So if you're looking at where euro dollar, for example, can be in 3 months' time, you want to go on the high time frame. And number four is just, as I got older, I just couldn't be bothered to be on the monitor 24/7. To be honest with you.
And did that degree of a separation from being locked in, looking at the chart, watching your trade, create a healthier relationship with trading?
I guess it did. Yeah, I guess it did, because you might notice, for example, like a lot of people where they're always on the chart and then they get chart paralysis. Like this is a phrase where people would look at a chart and they just can't find a setup, and then it becomes frustrating. Then it's like a doom loop of you're frustrated, and then now you're trying to force a trade, and now you're taking a loss, and then it just goes spiraling down. So yeah, I would say that, yeah.
Nice. So Mark, I've been doing quite a lot of research online because part of my role within my business is to ensure that my community is heard and making sure that my clients are happy.
Yeah.
And I've come across a specific group or sect, if you will, of traders that are convinced that there's some form of master algorithm. I'm not going to say specifically which group of traders it is, but if you drop who you think it is in the comments, one of the people who guesses right will win a free 50k prime evaluation. But what's your take on the idea of a master algorithm controlling the markets?
To be honest with you, I don't really agree to that, to be honest. It's just like, it's like asking, I don't know, if there was a master algorithm, who is the coder? Okay. Like, because there's so many feeds from different banks all around the world feeding into the market, how is this algorithm going to manage all of the other feeds coming through? If that makes sense. It's because they all have different parameters, they're all kind of doing their own thing, but this whole feed is just going to be driving price, if that makes sense. So I don't really get how that works, to be honest with you. I personally don't agree.
Would you say, out of my own curiosity, because sometimes it's not about whether you're right or wrong, it's whether or not a belief serves you or hinders you. So a wrong belief could still benefit an individual. Would you say that idea or concept is more harmful or beneficial to a new trader starting out?
I mean, I will always say it's like personally wrong, but that's because that's not what I would do based on the 7 years I've had in trading. I can understand why people do that because it's kind of like a herd mentality that everyone's saying, oh, this is what you need to do, this is what you need to do, this is what you need to do. But like how I see it is, if that strategy or thing is so good, why is the percentage of winners in trading still the same? You know how you say like the phrase is like 90, 90, 90.
Yeah.
So like 90 people lose their money, like blow their account in 90 days, but that's kind of still the same. Like it's not shifted to say, oh, there's a lot more profitable traders now. It's kind of still the same.
Yeah.
But then a lot of people say, obviously, it's mindset. Mindset is important, I agree, but like the strategy itself would allow you to have a very good mindset in trading. Like if you're very confident in that strategy, you know that because it works, you're going to win, if that makes sense.
Once an individual has a deep understanding of how fundamentals work, how does that play into a successful trader's mindset?
So like when you're trading fundamentals, there's not doubt. It's like, I know, in my opinion, Eurodollar should go up because of X, Y, and Z, not because technicals are telling me. Because remember what we spoke about, how technicals drives price.
Yes.
So if you know what the fundamentals are going to do, you have a high confidence in degree that trade should go in that direction. So there's not going to be doubt when you see those pullbacks. Oh, it's very close to my entry, or it's now I'm in a bit of profit. Oh, now it's pulling back. If you have the confidence that the trade should go up, you shouldn't really worry. And then that will feed through into more better trades out there.
So that deeper conviction will lead to less self-sabotage and things of that nature.
Exactly.
I get you. We've discussed how fundamentals help both on a practical basis and the mindset of an individual trader. I'm conscious of the fact that that's only just one person, and no matter how good an individual is, quite often the ability of many far exceeds individual brilliance. That can be the case. From your understanding of retail banking and investment banking, how does a bank trade that is different from the individual trader, no matter how skillful they might be?
Good question. Number one, obviously a banker will have more capital.
Yeah.
So they're not restricted to, oh, I've only got a little account, I need to, be more aggressive with it. Like they're happy, like the banks are happy to do big trades because they have the capital to do that. However, what I've noticed with a difference between like a retail trader and how they trade and a bank and how they trade is vastly different. Like the bank will go on the massive higher time frames and trade that. That's why I moved over, because I realized that actually if they're going on the higher time frames and holding trades for much longer, why am I not doing the same?
Yeah.
That's the question I asked myself. I was like, okay, I guess I'm gonna have to go on a high time frame.
Mm-hmm.
In terms of technicals, because obviously this is something that a lot of people ask, like what are the bank's technicals? How do they do it? To be honest with you, it's actually relatively the same in terms of how people would do it. So for example, what I noticed with a lot of people like HSBC or like Barclays or Goldman will all have roughly similar levels. Mm-hmm. So like they will go on the high time frame and say, for example, euro dollar. If it pulls back into 115, because that's a big high time frame level, I'm looking to buy that because of X, Y, and Z. Yeah. And the X, Y, and Z will come from the fundamental aspect. Mm-hmm. Because they know if it trades below 115, there has to be a big reason for it to go lower.
Yeah.
So now they'll have a high conviction that this level is going to hold, and then you can do whatever other technicals you want to do. Break and structure, supply and demand, that all works, but it's just about understanding the higher time frame and how they do it to then transferring that from the lower time frame to the high time frame, because I do both.
Would you say that the fact that they're more committed to higher time frame trades can speak to the fact, A, as you said, that they're more liquid, so they can wait being in an unrealized loss for hours, days, weeks, because they're confident in their conviction of where that price will end up.
Yeah.
Whereas for the individual, that could be too much for them psychologically to handle being in that.
Yeah. I mean, I would, for example, I don't know, I think this is like a few months ago now, but it was like Euro GBP sell. Obviously, it's rallying pretty hard at the moment, but Euro GBP sell, and then like I think it was like Goldman or whoever, they had like 150 pip stop loss. Obviously, that's pretty nuts.
Yeah,
I wouldn't be happy with that, but they're happy to capture like 0.5%.
Yeah,
because you remember they're so liquid, they're taking huge trades. That 0.5% is going to be massive.
Yeah,
in terms, it could be hundreds of thousands, a million. I don't know how much notional value they entered, but you see what I'm saying? Like they're happy, like you said, to hold that trade. Even if it goes into drawdown, their stop loss is already pretty wide. Yeah. To then understand that, okay, even if it does go a little bit higher, I'm still having good conviction for it to go lower, for example.
That makes perfect sense.
Another sort of good comparison, shall we say, is the amount of leverage that, number one, retail traders will have. I'm sure you might have seen some brokers would offer like 1 to 500. I think I saw at one point like 1 to 1,000, which is pretty crazy. Versus the sort of the big guys who either don't use leverage or use very little. Yeah. So when I say very little, I'm talking like hedge funds where, they haven't got as much liquidity as like the big boys, but they still use a bit of leverage. So like they might use, 1 to 5, 1 to 10 at the most, sometimes a little bit more, but that's sort of the average. If that doesn't tell you that you need to reduce your your leverage, I don't know what will, to be honest.
Interesting. And what negative attachment can there be to having too much leverage?
It's just that for me, I started off with high leverage because that's the broker that I at the time had. I think I had 1 to 100. Yeah. For me, I found like it was free money. Like that mindset of like, oh, I've got all of this capital to play with. In reality, you haven't. Yeah. So it's just that it just creates that gambling mindset of, oh, I've got all of this money. Let me try and do like a big trade and hope it comes into pass. But then if it doesn't, you're a little bit stuck.
I get you. That makes sense. So would you say that a core differentiator for someone, particularly if they're starting out, would be to reduce leverage, reduce risk overall, and focus on a percentage gain rather than a specific figure that they're trying to make.
I've always said, think about the percentage and not the monetary value. So like if you make 5% in the month, that is still very good.
Mm-hmm.
Like you're pretty much beating the S&P, what makes like 8 to 10 to 12% a year.
Mm-hmm.
Like that's still very good returns. Like I know some people will try and get like 30, 40% in a month. That is not sustainable.
And how do you see the effect, particularly with maybe younger or newer traders who are inspired by TikTok or films, whatever it might be that they've seen people getting, Lambo lifestyle, etc., etc. How has that impacted the trading journey of the newer generation of trader?
That's a good question, actually. There's a very common denominator between an actual trader and a marketer.
Mm-hmm.
Like what I've noticed online is that the guys who are driving like these Lambos or like this living a super lavish lifestyle do not trade.
Yeah.
So you have to just remove that out of your mindset that this is how a trader lives. It's not. It's a trader will live how trying to do as much work as you can.
Yeah.
Make money, and then you can, I guess you don't have much time at the end of the day to do all this stuff. So just remove that mindset of this Lambo lifestyle, because every single person that I know or that I've heard of from somebody who sells that mindset does not trade. So I don't know if that tells you like what you need to do. So just do opposite of what you're seeing online, basically.
That makes sense. You touched on something else there where you said a real trader will not have any time left during the day, right? But we hear or see a lot of spend 1 hour a day doing X, Y, Z to improve your strategy. What one core piece of advice could you give to a newer trader, given your background, your education, so on and so forth, as a way for them to educate themselves on success in the market? Because all that time can be used for something.
Yes, that's true. I would say when I started, what I was doing, it might work for other people, it might not work. But what I did was go online, go onto YouTube. I use Bloomberg a lot, actually. So Bloomberg was my life and savior, still is. Go on there and read something. If you don't understand it, note it. So they might talk about, I don't know, what are rates? Google it, what are rate? Try and find out as much research as you can about that subject. That's what I would do if I was a brand new trader. Is number one, in fundamental space I'm talking, read up something. If you don't understand it, go and research as much as you can about that topic.
Be a sponge.
Pretty much, yeah, pretty much.
That makes sense. So we've discussed a bit about Lambo lifestyle, what makes a suitable trader, so on and so forth. Talk to me about the end result of your own personal experience. What's been your biggest win to date trading fundamentals? I
know a lot of people like to think pips and monetary value. Pip wise, we sold GU, I think it was at 134. This was post COVID, and it went all the way down. Do you remember the Quarteng issue? Remember Quarteng? He was like Liz Trust Quarteng.
Yes.
And then GU went boop. Yeah. We traded all the way up to there from the top, all the way down.
Beautiful.
I think that was like over 2,000 pips actually. Monetary wise, I didn't put too much into it actually. I think it was 0.5%. But I think I just made just over 10 on 0.5%.
That's amazing.
Which is pretty decent, I'd say.
Results speak for themselves, don't they?
They do, yeah.
So what was the reasoning behind that trade?
So at the time, it was 2022, I think it was. GU's trading 134. Our reasoning to enter that trade was, number one, we were seeing the Fed, so raising interest rates. So when the Fed raises rates, it's generally pretty positive for a currency or any central bank. it's generally pretty positive for the currency because as an FX trader, what you're thinking about is the flow of money.
Yeah.
So you want to know where are these big guys putting their money.
Mm-hmm.
So if you're living in the UK and you're a big boy and you want to put money into the US, you have to change your pounds into US to invest into the US market.
Yeah.
That change of money is going to strengthen the dollar, isn't it?
Yes.
If you're living in the UK. So you're selling pounds, buying USD.
Yeah.
So if you know the Fed is going to raise rates, or you're seeing that because inflation's high, you know then that from that angle, the US economy is also doing pretty well. From a data perspective, it's doing pretty well. The UK was not doing amazing.
Mm-hmm.
So you're doing a comparison thing now. As a trader, you're comparing the UK economy versus the US. At the time, the UK weren't doing too well. They were, of course, raising rates. But if you're raising rates into a weak economy,
Yeah.
you're just going to tank it even more
Mm-hmm.
because raising rates becomes more problematic for weak economies. At that time, would it make sense to sell GU? Because you're selling the UK, buying the USD?
Mm-hmm.
Yeah. So we sold it, and all we did was, as it went lower, all we were doing is just following the reasoning. Does it still make sense to hold that trade?
Yeah.
Does it still make sense? Does it still make sense? Does it? And then obviously, once we came all the way down to, I think it was 102, that was the lowest it's ever been.
Mm.
So it was like, okay, now we probably have to exit it
Yeah.
because it's probably not going to go any lower than that.
Makes perfect sense.
Yeah. That's
Beautiful.
pretty much.
Well, thank you for coming down. It's been super insightful to give us a fresh perspective, and I'm sure that our traders here have got quite a lot from it. So thank you so
Appreciate you.
much. I appreciate that.